Hello, Memecoin degenerates, and welcome to another episode of Memecoin Academy. If you like what you see today, please click the like and subscribe button and follow us for more episodes. Okay, on today's show, I'm going to be doing some live trade setups for you. Now, we are going to be using our old trusty friend, Dex Screener, and for basic auditing, I'm just going to be looking at Photon here, okay? Just quickly to reference if, the Mint Authority, the Freeze Authority, the LP, and the top 10 holders all have the nice green tick, like you can see on this one. But basically, we'll be just using Dex Screener today. I'm just going to randomly choose any of these meme coins. It doesn't really matter about the market cap. We can do technical analysis on any of these as long as there's enough data that we can play around with. Well, we can find some really good entry on these tokens. So I'm probably going to focus mainly on Solana tokens today, just because they seem to be the most consistent, have the most volume, and there has been some issues with Dex Screener at present. I've been having a fair few issues with a lot of the TON tokens refreshing and what have you, quite a lot of other ones. So Dex Screener has been a bit glitchy in the last 24 hours, but we can carry on and I can show you some of these setups. So look, we're just going to pick them at random here today. Let me see. So we're on a 6 hour number one. Okay, we'll just start with Pop Dog. Okay, Pop Dog is one that has really taken off in the last 24 hours. Being bantered around a lot. So let's have a look at this one. So there's a couple of points, obviously, where there could have been good entries. One here, and there's also one here. So this is a token that looks like it's on the up and up. Now, let's look at our tools. Over here on the left, we've got our tools. Now, first of all, let's just look at where we are at present. So, okay, what can I see here? We're on the 5-minute chart. We'll keep it on the 5-minute chart for now. What I might do is go to a 4 hour just to see what we have for reference. Okay. So, what we have here, this hasn't closed as yet. Ooh, big pump. Nothing on the 4 hour. We'll go down to a 1 hour here. Straight up, what I can see here is a support resistance flip almost. So see this wick down here from this peak here to there. This counter bodies, this close and open has found perfect support on top of that. So basically, the first wave wicks and always an important level, where price will generally come and find support back at. So always keep that in mind. Look left, see where price spikes, see where it came back to, and then once it goes back above and comes down, you generally find support around these areas. So just keep your eye on that. We'll go to a half an hour chart. What can we see on the half hour chart? Yeah. Right. So the entry here, right, coupled with that, let's go to a 15-minute, is pretty clear, okay? So we've got our first initial pump here, which there was another entry here, but let's just focus on this one because we're a bit later in the piece. So we take our Fibonacci retracement tool from the low here to the high, right? And if I've got a magnet tool on, so we'll take that off. Just drag her across a bit. And look at that. As you can see, perfect retracement to our blue pocket. Blue pocket is our 0.75 and 0.786 Fibonacci level. That blue pocket area is our golden zone for meme coins with the blue pocket, okay? So as you can see, prices come up, come perfectly back down and respected not only the top of this wick, but it's come down, swept it, and gone back above. Okay, so let's use some other tools here. We have our fixed range volume profile. So we can take that from here to here. And there you go. Look at that. If we go to a 5 minute, you can see it even better. Yep. It does that sometimes when you change time frames on Deck Screener. It doesn't like it. So we'll take it again. We'll take it from here to here. Right. And there we go. Look at that. So the bottom, we'll take our horizontal line and we'll just map out the bottom of this value area low. And see that? Look at that. Perfect confluence. Okay. So what we have there is 3 levels of confluence for an entry. 3. We want 3 to 4. Okay. 3 to 4 levels for a trade. Now, let's look at this a little bit better. So we've got 3. So 1 is the retracement back down to the blue pocket. The second is it's wicked under and found support and come back above the previous high, right? The previous all-time high. It's found support of that. It's also found support at the bottom of our value area of this range, right? Which is very important. So there's 3 levels for a confluence. And then added into that, okay, let's put on our on-balance volume. Now, on-balance volume, this indicator here will show us at that time, right? You can see the uptick in volume. You can see it increase here. But what we can really see, let's just get rid of this fixed range profile. We have the as you can see, look at that. The value area low is directly on the bottom of that 786. Perfect, right? So if we go down to a 1 minute, which is quite low, but we'll go down for the sake of this. Okay, what you can see here is that volume, I'm so used to using TradingView and having all my favorites saved. Look at that. Change that to white so you can see. Look at that volume increase. Beautiful. Okay, that's what we want to see. That is your trigger point for your entry. That is what you want to see. So our entry, once we got it back up above here, is all this range here. Okay, so that would have been your entry point on Pop Dog. We could have taken this up for a, let's see here. Let's get rid of that. We could have taken this up. Well, how far did the price go up here? So we'll go back to a 5 minute. Just so. Look at that. So that is a price range. So let's say we came back above in this 0.75 roughly. That's a nearly 400% gain, right? You would have taken profit at 100%. Let's just say around this area here, right around there. Let it ride, okay? Could have taken profits here, here, and then watch price come back. Now, one thing, that's the initial entry, right? If you missed it earlier here, you could have got the entry here. Now, let's fast forward to now, and let's see what we're playing with here. Okay. So, let's see here. So where we are here, so straight up, okay, you can see prices had a bit of a pump. So why is that? Okay, well, basically we're in a solid uptrend. If we take our ray tool here and we take it from, put our magnet tool on, and we take it from the bottom of this and we line it up to here, first, as you can see, prices come perfectly to it, swept under and continued again. But then we've had another little sell-off, a pump, and it under, and it's come back under, right? And it's tried to swing this previous low, but it hasn't quite made it, okay? So how do we find the entry here? Well, it's not really going to show us much off this trend line. And for me as a trader, this is why I don't particularly like just trading off a trend line, because, you know, you need more than one level. anyone that tells you that you can just trade off this one trend line is, they don't know what they're talking about. Just having a sip of coffee. I mean, it can be done, sure, but it's not the highest probability trade. Because look, if you had have, say, taken this trade here, you would have got, you'd be, if you had a set a stop loss below here, you'd be out of the trade. I mean, you would have ranged all this period and you would have thought, yes, I'm making it, and then it's dumping, and who knows what you would have done here. Would have you cut your losses? Who knows? So we need to use this trend line as another level of confluence to enter our trade. So we'll leave that on, okay? Now what we want to do here is we'll take our Fibonacci retracement tool again, and we'll take it from this low to this swing high, okay? And what can you see straight up? Straight up, you can see that price has come back, and it's perfectly, once again, found support at our blue pocket. It's come up. It's nearly hit the equilibrium. The equilibrium is what's known as the 0.5, right? The 50% value of this range. So from this point to this point, the 50% level is the 0.5 on your Fibonacci, right? So it's come back to it. It's nearly hit it, and it's come back and retraced. And we've hit it again perfectly. We've swing fail patterned this previous low, okay? Let's put our little thing on that. See that? We've come down, back above, and we've gone. Now, how do we find the entry here? Okay, well, to me, you could have entered here on volume, but I probably would have waited a little longer just to see how this range played out. And what I probably would have waited to see was this to swing this previous low and then come back above and reclaim this trend line, which it did. So that for me could have been an entry here. Although you would have, for me, I would have, if I had have entered here, I would have stayed in the trade over here, because the stop loss that I would have had would have been probably 10% below here, around to this level here. So that it'd still be good to go in the trade. Now, how we also find another entry here, if you miss this one, is if volume is increasing, right, around these areas on this pullback here, well, all we have to do again, and we are considered an uptrend, is pull our Fibonacci again from this low to this high, and look where price came back to. Perfectly to here. So there's your entry point right there. Okay. Volume starts increasing, price moves up. Reclaim of the trend line, off she goes. Okay. Now we can back this up with our other friends. We can have a look at our fixed range volume profile again. We'll take it from this low to, let's say, we'll take it to there. And as you can see here, the confluence for this entry perfectly would have been, if you wanted to make sure that you were getting that you were seeing a sign of strength, right? The sign of strength would have been coming up, closing back above the value area low here and above the trend line. With increased volume, we're away. Okay, this is why it's important in trading to never be too early. Okay, you never want to be too early. You never want to be that trader that's buying this downtrend, right? You don't want to be that guy that's buying, buying here and buying here, or even up here, right? You need to let the chart show you and the market show you what it wants to do. So we had to wait for this downtrend, right? And you could say we had to wait for this falling wedge pattern to play out, right? So we waited for, okay, this downtrend here, and what happened? Okay, it swept that, came back above, found support, and then went. Not perfect, but a falling wedge all the same, right? And off she goes. Similar thing happened here. Broke back above, off she went. Broke back above, off she went. Now, I don't trade patterns alone because, once again, the probabilities aren't in your favor with patterns. Saying that this particular pattern is going to do this 70% of the time, it's a meme. But it's got as much fundamentals behind that analysis as some of these coins do, which is nothing. So what you need is levels and layers of confluence to enter a trade. And here, in this area and this area, we had more than enough. Okay, so that's how I would have entered these two levels on Pop Dog, right? And it just shows you how technical analysis can work on these, and does work on a lot of these tokens. Now, we'll have a look at some different ones. Another sip of coffee here. Now we'll look at one with a lower market cap, something that's relatively newer. What's this one? Boomer? No, Bear? No. HODL. Let's have a look at HODL. Now, what's HODL doing? Okay, let's go up to half an hour. Looks pretty new. HODL, right? Okay, HODL is just in an uptrend. Is this a pump fund token? Yeah, so it's come from pump fund. So look, on this, let's have a look. I'd personally be expecting, whoever's invested in this to be taking profits at some point. One thing with these pump fund tokens is they're going to take profits, and there'll be a retrace. So I'll never trust a trend line that's perfect like that, right? A lot of traders will tell you that that's what you want to see, and that's fantastic, and it's great, and it's good for market structure. But generally, what you'll find is, it'll sweep the highs and then come down, and it'll generally come back down, especially in these. Let's say that's the peak. It'll generally come back to these areas. Sometimes, if there's a big sell-off, depending, if it's got a decent team behind it, let's say it's got a decent dev, or it's got a decent CTO behind it, you'll usually find on these retraces they'll either bounce at this 786 level and go, or they'll come down even further to the 886, right, and then they'll go. And look, sometimes they'll come right down here and they'll sweep the lows and then go. But look, generally when they do this, that means it's dead. Yes, you can find some great setups, down when prices come under here, but you have to be on the ball, okay? You have to be, looking at the socials. What are they doing? What are they talking about on their Telegram? This one doesn't even have a Telegram, which is unusual. It has a website, a Twitter, but what are they talking about? So, if you hadn't been getting in these little entries here, good for you. You've made some gains, but this is probably not one I'd be looking at right now. Could it keep going? Sure, absolutely. But yeah, let's have a look at this one on Photon. So it's HODL. Let's copy that one. Let's have a look. Search him on Photon. Let's have a look. HODL. Let's have a look at that one. So, yeah. It's got 3 ticks out of 4. Top holders hold 31, nearly 32%. So that's, not the worst in the world, but, the probability that they could dump on you is it's high. So, yeah, but for the sake of today, we're just looking at the TA. We're just looking at what these tokens can do, and we're just showing you how you can find these entry points, okay? So let's look at another one. Let's look at what have we got here? Dougal, eh? Have I looked at this one before? I don't think I have. Oh, it's a Matt Fury one. Okay. Matt Fury design. Okay, how long has this been going? Let's go to daily. This has been going for a little bit. Okay. So we can actually, this one's been going since the 19th of June. So we can actually find some levels on this from a higher time frame perspective. So we'll have a look at that. Now, what I'm going to look at here and what I'm going to add into the chart is some higher time frame support and resistance flips, right? Support and resistance areas. And what we use here is the horizontal ray. And straight up, I'm on the daily chart here. Actually, I might look at a weekly quickly. Let's have a look at a weekly. Nothing on that. We'll go to a daily again. So first thing I can see is we have, that one's been just front run. That one's been front run. That one hasn't. Okay, so we have one here. Let's make that blue. I'll make it a dark blue. Okay, some settings, put some text in that one. Yes, add text, so we'll call that a daily. Support and resistance flip, right? Oh, fucking motherfucker. Right, start again. Daily SR. Whoops. Okay, there's that daily SR. I'm just flip to the right. See one on this right there. So there's one, okay? One daily SR. This one here, as you can see, has nearly been tapped by this candle here. So nearly it hasn't been, so I'll mark that one as well. Mark that as well. Yeah. So look, right. There's one there, one there. Look, that one's nearly been tapped, but we can use that for now. We have another one here and another one here. This one is of interest because if price comes back below here, it's likely to swing this low and find support on this support area here. So we'll mark that one out. Right. Okay. So there's our areas of interest at the moment. These are our daily levels. So why we call this a daily support and resistance flip is because we've had a daily candle close and a daily candle open on this range to create this support level, right? So there's a lot of volume in these areas, okay? We don't mark this one because it's been tapped through. It's already been tested, okay? See how this one here has just been front ran by this candle. It's technically not tapped, so we can use it, okay? You can use these tapped areas once the candle's got it for reference, but once once support or resistance is touched once, it gets weaker as you go. Okay, so we're only using them for reference for the one time, and we don't use every one as well. We're just using the ones of most importance to us. So we'll go back. We'll go to a 4 hour. We can also use 4 hour levels on this one. So what 4 hour levels do we have of interest here? Nothing here. That one's sort of been tapped. This one is of interest. So there's another one here, which is on top of this daily. So we can just leave that as is. This one here, I'm more interested in price coming below this level, so we'll just leave that. Okay. So let's see here. Let's do some more TR on this one. We'll bring it down to a 1 hour. Okay. So as you can see here, from this low here, these series of lows, prices come back So if we put our Fibonacci on again, you can see this price has perfectly come back to our blue pocket here. See that? Boom, and off she's gone. Now, this low with this uptrend this is in, this is probably unlikely to get taken out. It could. They'd need a serious sell-off, but if it did, it means that from here it would have to come down like 75% to 80% to reach this 886, to reach these levels, right? So could it happen? Yes. Is it likely? It's hard to say. I mean, we are in an uptrend, okay? If the simplest way to find an uptrend is just with the trend line, okay? So we take our tool off, we are just trending upwards, right? Price is trending upwards. So what's more likely to happen here? So if we're looking for an entry on this one, we're more likely to be looking for an entry around this support area flip here on this daily SR. So we'll take our Fibonacci again, magnet tool back on, and we'll take from low to high, right? Which lines up with this daily support and resistance flip here, okay? If price doesn't hold here, okay, well, if price came down here and it didn't hold here and didn't find a bounce, well, I'd be looking for more likely a retracement to the 886 and then going. However, it's likely that if it didn't hold these levels, you'd be sweeping under this and coming back above. Right, that's what I'd be looking for. A swing failure pattern of this low, okay? And even a series of these lows, right? But this area here also does look like good support for a couple of other reasons. And that is, let's get rid of these, is this zone here, okay? Right here. This one, take this here. This little zone here, see that? Right there, that's support and resistance area, okay? Let's change the color of that. Oh, look, these boxes annoy me. I'm just going to use a line. We'll just use the white line. So we'll just use the top of this candle here, just to give you an idea. There you go. This support area here, already found support on that, which is basically lining up with our 786, right? You see that there? Resistance, 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 support, support, support. Broke through, come back above, wick straight back up, and we're gone. If we come back down, well, this area here is a big area of support, right? So I'd be, if we're retracing, it'd be this area to sweeping this area, right? So once again, don't enter too early. Don't enter on the way down, okay? Don't watch price do this, and bounce at these levels and start getting entries, here and here. Just wait. Just wait to see what it does, okay? You want to see it, and the most ideal thing is to watch it come down. Watch it come down. Oh, yes, no worries. Oh, no, I'm not going to enter now. Wait for a sign of strength. And what's a sign of strength? A sign of strength is a reclaim of a level, okay, on higher volume, right? So let's just say that volume here, right around here, starts to increase, okay? We're looking at our on-balance volume indicator, right, as well as our volume candles. And we're watching this price action find support and start to range and then have an increase in volume here, right? Well, there's our entry trigger. we've only got two levels of confidence, pretty much. But that's our entry period. Well, let's say it's three actually. We've got our daily SR, we've got our Fibonacci retracement, and we've got our increase in volume. Three. Okay, that's enough. Okay, we can find others, but you need to let the market show you what it wants to do. It needs to show you its entry. You're not here to I've got to find it, and I need to find it. Let it play out. Let it show you. So what if you missed this? Say you didn't catch that. Well, your better entry is here anyway, because you need confirmation, and the confirmation is the reclaim of this level, and off she goes. So that's how easy it can be. Okay, but you need to watch it. You need to let it play out and try not to have the fear of missing out, because if you have the fear of missing out, that just means it's pure anxiety, and you're not going to make clear, concise decisions. Okay, and you need to have a clear mind in trading. Okay, so that's Dougal, right? Basically, let's have a quick look at Dougal on Photon. Let's go look at. Oops, let's have a look at that one. Click the copy. Let's have a squeeze. Dougal. One issue, top holders, look, below 20%, that's fine. But everything else looks okay. Haven't looked at the socials, not concerned. As if any of you guys are interested in these tokens, you can look at that yourself. But this is in a good uptrend. This looks healthy. Healthy token. Been going for a period of time. Looks like an okay play. Who knows? But you need to wait for the retracements. You need to wait for it to come to your levels. Okay. So let's have a look at some more. Let's have a look at some new ones. Some new ones that have just come out. Let's go 5-minute trending. New pairs. I don't want too new, because look, if we go to new pairs, right, and let's just go to newest, and I'll show you what I mean. It's unlikely that you're going to be doing any TA on these. Okay, if we go to Solana, not again. Let's say Solana newest, right, and we go to let's look at this one. Are we on newest? So we go to this one, sus, right? Like you have to go down to like a 1-minute chart to just get some form of data, or even a 1 second, and it's not ideal. We need information to give us the ability to make our trades. This is just, there's not much going on here. I mean, it's more of a gamble, right? So, these are if you were looking at playing these ones, well, basically it's pretty simple. Buy low, sell high, right? That's it. You basically you want these to start forming a range. Okay. When I say range, I mean like create a range, right? There it is. It started to form a range here. It swept it, went below. There's your range, right? High to low. Your entry point would have been here. You buy the issue with this. I mean, this would have come down to where is it at the moment? What are we at the moment? So this would have come down to let's say a 39 to 35,000 market cap, right? Down here. The likelihood that you could have bought in here and taken it up, sure, could have made money. But with the amount of rug pulls there are these days, you don't know where the price was going to come here, come back up, and then just go like this. Right? Rug pull. Devs out. CTOs, as soon as it's CTOs, as soon as the dev sells, boom, they can go straight up. So that's something to keep in mind, but that's for a different day. Dev selling, dev buying, does affect price, dramatically. But that's something else to look at, okay? So we'll ignore this one, but it goes to show you how you need data, right? And if you want to be a consistent trader, you need to find these tokens with quality data, okay? Quality market structure, volume, and a lot of makers, because that's what's going to give you the edge is finding these. And the more value that it has in it, like the more volume it has, the more it's been transacted, and the higher the market cap goes, the more likely it's not going to get rubbed, right? Now let's have a look at another one. What else can we see here? What else has got? What's this one here? Spike. DJ Danny. Piggy by Matt Fury and Ray cover. Mr. Beast. So that's Ethereum. So we're just focusing on Solana. Just bear with me here while I find a decent one. Hearing things. This Degen Danny keeps poking its head out at me. Degen Danny. Okay, Degen Danny. 45 red flags. Interesting. What's going on with Degen Danny? So these ones here, right? You'll see a lot of these tokens that just flatline for a while, okay? But where they flatline is interesting. As you can see, that they just come back and they hold support and they range. So where do they range? And this is something I want you to take into consideration and to put in your bag of tricks, right? So let's take our fixed range, our Fibonacci retracement, right? Pull our magnet tool on. We take it from the low, right from the low here, and we take it to the very first high, and we drag her across, right? I just want you to see where price comes back to. Look at that. It perfectly holds support at the blue pocket for, let's see how long it holds support there. Our date range tool, take them here, to before it pumps, it holds support there for over 2 weeks. Over 2 weeks it ranges at that level, right? It just goes to show you how strong Fibonacci is, how important these levels are, especially the blue pocket area, right? The blue pocket area, the 0.75 and 786 area in Memecoins and altcoins is so important. It's crucial, okay? The 886 level is also a massive area, okay? And it's a red zone for me, which means that if price, let's just say if Degen Danny at this point in time came up, came down, found support here, and then came under, well, I'm out. As soon as it does that, stop loss triggered, I'm out. Because that generally means that it's dead, right? The tokens, it's done for. So, this area with this strategy, you want to be holding your stop loss under, like, it could, yes, come and sweep an SFP this low, but generally, right? Generally, in probabilities, that once it comes below here, who knows what's going on behind the scene? The teams, the devs sold out. The teams, it's been CTO'd. It's a fake CTO. Who knows? Who knows what's going on behind the scenes? But that's why it's important to keep your eye on the socials, the Telegram, right? What are they talking about? What are they discussing? What's happened? Have they locked the chat, right? Locking the chat is a big sign that something's dodgy is going on, especially if they're not doing Twitter raids, right? If they're not doing Twitter raids and they've locked the chat, it's time. Generally, for me, it's time to get out because something's going on. It's fishy, right? Are they active on their Twitter? When was their last post? What's their website look like? Is it shitty? Is it cheap? Is it nasty? Right? Have they put effort into it? All these things help with like the probabilities of success. Doesn't mean that it's going to be make it like it's going to be perfect every time, but it means that they've put effort in, and they are putting effort in, and they want it to succeed. Right. So these are all parts of your trading strategies that you use to hopefully have the trade work out in your favor. Right, along with your technical analysis, your confluence areas, and all that together supports you going, okay, buy. That's what it is. You have to put all that effort in to click buy. You don't just come in, look at it, and go, wow, oh, cool, up. Oh, it's going up. Excellent. I'm going to buy. Use. Right? You need to let the market show its hand. And this is what we're doing. And this is what it's done here on DGen Danny. Okay. It's taken some time. You need to be patient. Okay. These things move very quickly, like really, really quick. But they can also move really slow. Okay. And sometimes you will miss out. Sometimes you'll miss the trade. And you'll be dirty on yourself because trust me, I know what it's like. Sometimes you miss the trade and it's worse than missing the trade than actually losing your money. It sounds stupid, right? But it's true. You go, damn, I wish I'd have gotten into that. Oh, I could be up X. But there's always another one. There's always a better opportunity. There's always another day, and the best trade is always ahead of you, okay? So make sure that you let the market play out. And so if we had have let the market play out here, okay, we would have had time, okay, one, to see, okay, prices come up, it's come down to our support level, it's still holding. Okay, that's a good sign. Volumes, flatlined. It's gone up a little bit here, it's come back, but it's held. Good signs. So what can we put on here to back this up? Well, straight up, we'll put on our fixed range volume profile to give us a profile of the volume of this area, okay? And what supports it? The volume profile supports it perfectly. Look at that. So we have bottom of our value area. So this is our value area low, this blue line, right? Price comes down, hits the blue pocket, and is perfectly supported by the value area low, right? There's two levels, right? There's an entry if you want it. I personally, would I have taken a trade there? Not sure. But what is important and what you can see here that's quite that stands out is that once price came down to the value area low in this area, it's come back up, but it's found support on an even more important area, which is this point of control, right? And then it's gone. So if price comes down, sweeps the low, finds support in the value area, then comes back above and finds support on the point of control, that would have been our entry for a trade. Okay? That would have been my entry. I would have even taken a small little Fibonacci pull here from this low to this high to see where it came back to. Nearly came to the 786, but what's on that level? The golden ratio, the 0.618. Look where it found support on increasing volume, right? Let's have a look here. Let's just zoom in. Okay. Let's zoom in here just so you can see. Now we're on a half an hour chart here. So I want to bring this down to, let's say, the 3 minute. just so you can really see what's going on with the volume. Oops, what about that? If you want to get back to where you were, guys, just click auto and then just readjust instead of having to scroll around, look for all your stuff again. So, right, as you can see here, after this sell-off, what's volume done? It started to increase, and to be honest, it never really looked back, right? So once it came back down to our blue pocket here, let me just get rid of this garbage here. Oops. That back on. Once it came back down to our area here, right, we started to find volume increase. It's hard to see on your candles. You really have to like zoom in on this area, but you know, it's really hard to see. This is where the on balance volume ticker really helps. Okay. So as you can see, volume's increasing, and then off she goes, right? Once support's found here, that's where this is the area I would have entered, right? See how easy that is, right? Anywhere from this zone there to there, so you can see. There's your entry. Clear volume. Off she goes. Okay. Now, let's get rid of this, and let's just see if we had have entered there, okay, what percentage gain we could have made on this one. Get rid of the unbalanced volume. Let's have a look at this. Okay, so our entry point would have been down here. So let's say entry was around here. Roughly nearly 800%. All from using levels of confluence, using Fibonacci tool to find our support area, using our fixed range volume profile, right, to find the value areas of this area of this range. And once it's finding support on those areas, well, we can say, well, look, I've got confidence the price is going to hold, right? And our risk to reward ratio, right? If we put our risk to reward, let's go up a higher time frame. Okay. So our risk to reward here would have been, let's say, oops. No, I got wrong one. So for our long position, well, let's just say that was our entry right there. Okay. Let's just say that was our entry. So for, let's say we had our stop loss below these lows, 30%. Look, a 30% stop loss is you know in trading crypto is a heavy loss, right? It's a lot, but in meme coins, it's pretty standard. You know, I would keep it to 20% personally. Let's say it's 20%, but that's just technically below this value area low. So let's just say for the exercise, it's 30%, right? So we have a 30% risk to a nearly 900% reward, all from using basic Fibonacci levels of confluence. That's it. That's some pretty good odds to me. I like that. That ratio is in your favor there. Okay. So this is the importance of being patient. To have it play out, find your levels, and then execute. Execute with confidence of finding signs of strength, backed up by areas of support with your increasing volume. Okay. Signs of strength. Enter, make your gains. Okay. On the other hand, you see signs of weakness, right? Start seeing signs of weakness, you're not going to win every trade. So if we start seeing signs of weakness, right? Let's say we entered like here, okay? Price moved up. It, let's say, rejects here, comes back, and then comes back below. Well, that's a sign of weakness. Coming back below this area and under this value area low, right? That's our sign of weakness. Then we would have got stopped out. But you would have been already protected because you had your stop loss already here, right? 30% loss, move on. You've still got 70% of your money back for the next one. Okay. And with proper risk management, that 70% shouldn't have put hardly any of a dent in your portfolio, because smart traders don't risk their whole portfolio. You know, smart traders risk 1%. 1% of their portfolio, not 100%, and they don't risk 10%. Smart traders risk 1%. Okay? If you're more of a gambler, you're more of a degenerate, you'll probably risk more. If you risk 5%, so be it. That's up to you. And because of, you can risk a lot less to gain a lot more in this space, which is why there's a lot more gambling. But you'll be a lot more consistent and have a lot more consistent wins in this space if you reduce your position size. It'll give you less anxiety, it'll give you more confidence to enter your trades, and it will give you the ability to have patience and look for trade setups like this to present themselves to you. Okay? So that's pretty much all for today. I just wanted to have a look at a few of these, give you an idea of how I trade these tokens, right? And just to show you how easy it is to find setups with traditional technical analysis, and I hope you enjoyed that today. I will do a few more of these live trading setups for you in future episodes. But for today, that is all. I hope you enjoyed it, and I'll catch you on the next one. Thanks again.